very fantastic panel over here, and we are glad to introduce this panel. On the right inside, we have Eklavya Gupta. He is founder and CEO at Recur. Recur has been doing an amazing in terms of the subscription-based financing, and more so introducing it for the wider market, competing with the larger, stronger players who have been in the market, running the show and beating them on tech and quickness. And I think it's glad to have you with us.
Likewise. Thanks. Looking forward.
Sure. We also have Rohit. Rohit heads Windrose Capital, one of the early few young people to have the first AIF from Pune. And I think that's fantastic for looking at from an investor side. Plus, he has also recently ventured as an entrepreneurial journey as well. I think that's fantastic, handling both sides of the cap, and looking forward to having a great conversation with you, Rohit.
Same here.
We also have Navruz on my left, and Navruz is the partner at Shardul, Amarchand, one of the best known lawyers in the country, and has handled multi-billion-dollar M&A transactions. So how does it, and thank you so much, Navruz, for taking out time speaking with us, but how does it feel to be in Bangalore and speaking with us?
It's fantastic, always super to be in Bangalore, especially the weather, and looking forward to the conversation.
Absolutely, absolutely. And we also have Sandeep on the last leg. What they are building is exciting stuff as well. You all have understood and discussed about UPI for the consumers. They are building UPI for businesses, solving the entire challenge and interface of the payments. And we'll also discuss how, in fact, legal world can get some inspiration from the B2B payment solutions they are figuring out. So thank you so much, everyone, for taking out time and speaking with us. Without much ado, I'll just directly jump into the questions and how this entire domain is functioning. So for legal financing, Navruz, I'll first have a question from you. That legal financing is a very prevalent practice outside India. How do you see this panning up in India, and what are the benefits litigation financing actually play down for not only just the person or the claimant or the litigant, but also for the entire judiciary and infrastructure?
So, thank you everyone for Hi, good morning, everyone. Thank you so much for being a part of this event. So, as Kashish mentioned, I think litigation financing is a fairly developed sort of funding mechanism in the West, specifically in UK, Australia, Singapore, and through Kashish and several others, I think developing quite rapidly in India, and something that is badly needed. In terms of what I see, the benefits coming out for lawyers, it definitely levels the playing field and ensures that cases are determined based on merits rather than on financial capabilities. These days, a lot of matters, whether in the high courts or the Supreme Courts, are sort of decided based on the sort of quality of lawyer you have, and the sort of quality of witnesses that are sort of participating, and therefore sort of the claimant having a backing from a fund or a financer sort of really helps in sort of hit the particular case. And then in addition, from a lawyer's perspective, it gives us further objective analysis through the diligence that is undertaken by sort of funders before sort of investing their capital behind a particular claimant, and sort of we are able to rely on expert witnesses through the costs, through the fund sort of paying for such sort of witnesses to being part of such a case.
No, absolutely. And I think two of the benefits that you have rightly pointed out, for the fact that one, businesses and founders like ourselves can save on the cost, and second, majority you are able to afford the best of the lawyers to fight your case. To this, I'll turn to Rohit, understanding the entrepreneur side of it. Since you are saving on the cost, and as they rightly said, that once you start running your business, the only things that you're managing is people and the disputes. So they are inevitable to happen. Eklavya is smiling. I'll get on to Eklavya for this point also after you. But how as an early stage founder, being an investor, you ensure that every penny counts, and entrepreneurs also ensure that every penny counts. So how this alternative means of financing can actually save cost, and how as an investor you look at the entire side of things spanning up in the Indian market.
So it's very interesting because what happens is, as an early stage founder, one tends to cave in, right? Because the bargaining power is also always more on the other side of the table. Be it an investor, be it your first customer, be it your first corporate tie-up, or any such thing, the bargaining power is always on the other side. And as a founder, what you want to do is essentially just focus on growth, period. Like people, product, and revenues. And that's what you are scaling every day. And to get into litigation becomes, I honestly personally feel that the cost of litigation is much lesser on your balance sheet and P&L. It's much more on the growth prospect of the company, on the mindset of the founder, and of the leadership of the company itself, right? Because getting into litigation is really frustrating, given the judiciary system that we have. It is resolutions are not usually very quick. Having a financier basically gives a huge peace of mind, so to say, because okay, something else has been taken care of. I can continue to focus on my business expansion plans as they were decided upon. I don't have to budget a significant amount of capital for litigation. I don't have to worry about it, as long as I know that there is merit in what I've done. And more often than not, that's the case, right? Because early stage founders, or rather all entrepreneurs, want to actually give the best to their customers, because that serves them on the longer run. It's just litigation still pop up. You can't avoid them.
No, absolutely. And I think that's a key methodology. I mean, for our founders, you know what's best for your business, and you know how to run your business the best. You don't want to unnecessarily mess up into litigations, which is bound to. And by that, I think we should give a commendable applause to Eklavya, because after working with almost 300 companies for a revenue based or a subscription based financing, and still having a zero default, I think that's entirely through a tech is only glad to have him on board and achieve that fate. But I understand that it's inevitable someday or some line you will definitely have NPAs, touchwood, that they should be delayed as soon as possible, and lesser the quantum obviously. But how does it impact? I mean, obviously recoveries is one of the key pain points, especially if you're a lending business, and especially if you're a lending fintech, depending upon the unsecured financing that you do. I think it's a commendable portion on it. The more you scale, there are greater chances of having recovery. So how does it spanning up for you, and how do you see Indian's ecosystem maturing in terms of the financing that we're doing?
No, I think you make a very valid point, right? Like, I think we have been, obviously our processes systems have been there, but we have been lucky as well. I'll not deny.
That's being too humble.
So no, but in this business, you can't avoid delays, defaults, right? Like that's part of the game. How do you tackle them really differentiates you from others, right? Over a period of time. So typically, and that takes a lot of time, right? Like I totally agree. In any business, especially in ours, it's all about prioritization in early stages to or late stages of the growth, right? Like there's always so much to do, and you need to find what's the right ROI of your people, of your time, right? Were some collection agencies, I may call, right? Like that were prevalent in India over a few long years, with banks use that have been digitalized recently, which are great, right? But I think what additionally, like firms like yours, right? Like what LegalPay is doing, I think it's fabulous. It comes with its own set of challenges in India, right? Like, and I'm sure you know, and everyone knows it. But that's where the opportunity is. But if it is smoothly done, I think for us or any business doing like fintech or financial services, where they spend a lot of time, a lot of money, a lot of bandwidth on, what's the cost for it, right? Like so people will love it. Like if you say, come to me today and say that, which we have, right? Like so I'm just saying that, if that can be done smoothly, because that is where the key will lie, to be honest, right? Like if that's done, because then that takes the total burden away from a founders, from a team's point of view. And if that can be done, I don't think people will mind paying anything proportionate for it, right?
No,
Like,
right, absolutely. And I think that's quickness, speed is something that entire, I think all of us in fintech live up to, because that's something that we're beating on the market and a niche for ourselves. And I think many congratulations what you have been achieving. I'll move to Sandipan because quickness and speed is something that he is trying to build and in fact building in the B2B payment space. So how does it feel? And I'll get to Navruz also because legal infra, especially in the financing, on how even a court fees is paid off. It's very tiring process for a business when they are building a B2B for UPI for B2B. How do you see the entire legal infra or the legal market, which can be a core to the entire game changing for a B2B piece? Because one of the strongest outflow for a B2B is definitely legal fees as well.
So, see, this is how we see it, right? Like all the innovation that has been so far driven in India by is mostly regulatory driven, which has got a tremendous adoption. When it comes to B2B, there has not been the similar push what we have seen in the consumer space, and that's a fact. I mean, probably it will remain so for the foreseeable future, and that's where we come into picture. Now, coming specifically, why B2B? It's see, as a consumer, I think you can unify a lot of things. You can say that every consumer does ABCD payments and that's about it. But when it comes to business, it's the variety of payments is very different. The way different industries categorize different payments, the way they want to make those payments is very different, right? And that's where our core thesis is very simple. That taking an example of say litigation or law as an example, where every company would have some bit of expense on the litigation side, legal expenses. Let's be
Absolutely.
And I'm 100% sure anyone who has run a company knows there is a head called legal head, right? And you would have some bit of capital allocated on the legal side. I think what LegalPay is doing over here is commendable, given the point that it's off books right now.
Yeah.
Like, I think that's broadly how I can put that. Uh, Overall, from a founder's point of view, see, there are 2-3 things that we can optimize for: time, money, reputation. I think with a law firm and a litigation financing, I think the time and the expertise gets sorted.
No, absolutely. Time, expertise, and see, I always give an example. I mean, not a very good example, but it's akin to a health insurance. I'll always have money if some health problems arise, definitely, but I'll take a health insurance for a peace of mind and the fact that in case of emergency, I'll have something on. Similar to the fact, legal insurance is not definitely prevalent in India, but it's akin to insurance where you are paying only when you're realizing and you're not burdening yourself with the cost like that. And I'll move to Navruz because obviously the expense for an entrepreneur is for so
So the way, I mean, as some of you may know, litigation financing is a non-recourse form of financing. So unlike a loan,
Yep.
if the eventual sort of litigation goes the other way, the sort of funders sort of has to move out with a zero return on investment, and therefore I think just adding on to the point that was being discussed earlier, I think it's really important that we set up some sort of regulation to govern litigation financing. Having a sort of a broad-based structure right now where we're relying on precedents of courts which set out that litigation financing currently is permissible, and having informal groups like we currently have, the Indian Association for Litigation Financing, which was set up in 2021 to self-regulate litigation financing. While those are helpful sort of ways ahead, I think given the tremendous opportunity that this country has for the litigation financing space, I feel that it is a space that definitely needs to be regulated to ensure that sort of it serves the right purpose at the right
absolutely,
time.
sir, we are up for all regulations as long as it helps us scale quickly, and these are friendly. I think regulations are important. Everybody wants to be regulated. Just hindrances, I think, is something that everybody is worried of. But I think intent of even the law and entrepreneurs like us is of the fact that it's moving to the right direction, and everyone is solving the need of the market. Which again, I want to ask you, why do you see that legal infra or the legal space being the only space which have least amount of innovations? We have seen edtech innovations. We have seen innovations across the entire fintech domain. Legal and insolvency, I think, has always been the tougher part of the game.
So while I agree on the tech on innovation sort of point that the legal sort of field has some ways to go, I do believe that in some cases the legal sort of field is evolving, especially on the insolvency and bankruptcy sort of point of view, where previously companies that were bankrupt, creditors would wait for years on end to sort of receive their sort of their payouts and sort of amounts that were owed to them. So I think in terms of, I think every journey has a path, and I definitely would like to see from a lawyer's benefit and from a client's benefit that more tech is being introduced to the field of law. But I think from a first perspective, I think we need to sort of move away from some of the draconian laws that we currently have in place, have certain amendments to those laws, and sort of open up sort of that space before we move into a tech-driven sort of legal field. Is my view.
No, absolutely, and I think that's spot on. And I'll move to Eklavya.
I actually have a take on that as well. So I believe that, because we've looked as an investor, I've looked at so many companies wanting to improve legal tech, right? And there's this one common sort of a more fundamental issue that tends to pop up, that the decision maker, the user, and the beneficiaries are all different in this particular case, and their interests are not fully aligned.
Yes.
Right.
Yes.
And one person actually has to invest time and effort before the beneficiary can see the benefit of it. So it is just that misalignment is what I believe causes very slow movement of, adoption of technology and innovation.
No, absolutely spot on. And that's the reason from building on day one, we were always thinking for a solution which is a win-win-win. So it's a win for the business. You don't spend a single penny now and just pay only when you recover money. It's a win for the lawyers. They get timely payment. They don't have to follow up with clients. And I think that's one of the most biggest pain areas for.
And that's where actually, on a lighter note, litigation financing
Really
helps
big
us,
area.
because eventually we're not coming after our clients asking for payment of our invoices and having those paid, but that's on a lighter note.
No, absolutely. And I think for the investor side also, it's a win-win scenario because it's a very well-renowned asset class globally. Obviously, within India, we have done whatever small bit of ourselves in making it an investor class. But coming to the insolvency point that Navruz brought up, I think Eklavya, would love to hear your views, because Eklavya was with the special situations team, and insolvency financing. When a company is under distress, you finance as the first right given to a company under distress, or a corporate debtor, as we usually call it. And definitely it's a very strong asset class for the investors also. So what's your take on it? I know with Recur also you're building an asset class for the revenue-based financing or subscription-based financing for the investors. Would love to know your thoughts, because alternatives investment are up for here. I mean, the democratization of the entire alternative piece is here to stay, what I believe. Your take on it and how it is panning up in India.
No, 100%. I'll answer the second half first. So I think alternatives investments in India, while it's increasing, it's pretty small, right? Like if you compare globally, there are all kinds of esoteric structures, etc. And that's why we've seen that traction. It's just the beginning of alternative investments, which we have seen, like we guys do, as you said, right? Like, and there are multiple other forms like you're doing right now, right? Like, so I think there are a lot of opportunities everywhere. And the fact that they grow, right, like globally and in India, is because there's a proper use case, right? Like for both for the takers and the buyers, right? Like how to make it efficient. Tech makes it efficient, but even alternative investment funds outside the tech play, right? Like they're still very nascent. We see all kinds of $10 billion, $20 billion investments happening, but that's still very small as compared to, if you compare to the global market, and if you believe India is at the journey where we are at, I think it's just the beginning of alternatives growing. And for investor class as well, right? Like HNIs, family offices, domestic funds, other than just global funds, are getting access to so many better options in a low yield world. India is still better off in terms of yield. And I think that's why the adoption was lower in alternatives. but we'll see that picking up. I think with the innovative structures that are being done today. On your IBC front, right? Like I think the introduction of IBC has been a game changer for India. Because I was there at the time, when IBC was getting introduced, that law was getting introduced, and I was thankful to get involved in a lot of that formation as well. Obviously, things are not perfect. It's just the start still takes a lot of time. Initial cases did not get resolved in 180 days plus 90 days extension, what they're done. But I think at least the threat of people being pulled to IBC, and the business getting stopped as compared to Chapter 11 in the US is getting there, right? But what the problem was, given the delay in India, as you said, right? Like 180 days becomes 360 days, the case doesn't get resolved. And as a resolutional professional who comes in, and takes charge of the company in the interim, businesses, they were doing well because of being dragged to, IBC, and their business getting stopped for a year. The businesses, good businesses or decent businesses, went bad in that 1 year, right? Because they couldn't get any capital, nothing was happening, and hence the use of interim financing, right, is great for solid businesses. And no wonder we have seen such demand, because it could take 1 year, 6 months. It's unpredictability in terms of timelines. Absolutely. Right? And which is why businesses keep on need to running, right? Otherwise, they will anyways, they can't bury the cost structure and the teams get disassembled, etc.
Absolutely.
So we've seen a lot of bigger funds getting into interim financing. And I think you're doing a fantastic job. You could answer that better, but because about right awareness, that I think that's one of the most safest asset class if you get into, if you think carefully about it, right? Because if you know that the company is good, the registration professional is there, and on the waterfall you are more like a senior person to take money off. So I think it definitely is and will take more upticks in the coming future.
I always say the only risk is the time risk. I'm not sure when I will get the money, but definitely there is a time-bound process, and I think we're moving on to the right path to get a resolutions in time. And with that, I'll move to Rohit, because as an investor onto this market, and we're proud to have you as one of the earliest believers in our domain. So how do you see this market spanning up, especially given the fact that obviously it's not covered in any categories of AIF? We also would want to build upon that ANF, but how a large HNI or a family office would invest the money vis-a-vis a smaller investor investing the money? There is a wide disparity which we are covering up in terms of giving them access to such alternatives. So my questions are twofold. One, how do you see a disparity of investments, I would say, with a smaller investor investing almost 80-85% of the personal wealth into the real estate or the home that we live in, the balance approximately 15% in gold and less than 2-3% in financial assets, versus a large family office? One. And second, on how this market of alternative investments will scale up.
Okay, so those are two very heavy questions. I'll take the first one first, and I'll probably have to ask you to remind me about the second one.
Absolutely.
What happens is, see, when as the size of corpus changes, the strategy also changes. So larger the corpus, you move more towards a defensive strategy. Having said that, that should essentially imply that smaller investors should then take more riskier bets. But just as a function of available liquidity, most of it gets blocked in real estate, right? Because in India, there is still a cultural affinity both towards asset classes like real estate and gold as well, which are always seen as a safer asset class, even though they are not. COVID made a lot of people realize the riskiness in real estate.
And gold as well.
And gold as well, yeah. But more so in real estate, because people used to think it's like a invest and forget type of an asset class, right? And people have burned their fingers, like in terms of having multiple rental sort of yield coming in through that. Now, what suddenly happens is, one big thing that changes is, while smaller investors would be open to taking higher class, for larger investors, regulations and compliance becomes a bigger problem. So the point that you guys were discussing about earlier, right? So if there is a regulation that comes into litigation financing at large, that in itself should sort of bolster confidence of a lot more larger family office to then be able to write either larger checks or actually participate. A lot of them are not, like, just sitting on the fence and not participating. It's not even about the extent of participation. Now, I personally work a lot in terms of trying to build alternative asset classes be it litigation financing or even asset financing, revenue-based financing, things like these are the penetration is very, very low in India. Whereas this is where a huge chunk of value is yet to be unlocked. And traditionally, it has been happening in a very informal manner through unsecured lending, etc. And all of that is sort of like if you look at over the last, I would say 5 to 7 years, systematically being changed, right? Right from, let's say, demonetization to being able to track your inventory better using GST and stuff like that. Even for real estate, there was RERA then, which came in between. So we've practically had one good, hopefully good regulation coming up every year, so to say. Even IBC came up. AIF regulation, like in India, the whole VC industry picked up primarily over the last 10 years, right? That was after the introduction of SEBI AIF regulations in 2012. They made significant amends again in 2019, 2020, and suddenly you see early stage activities now sprung up. Why? Because the regulations made those more sort of clean and clear. So when there is no gray area, it becomes easier for a larger family office to write a check, because for them it is again more about like the approach is a bit more conservative than smaller participants. So for any such new asset class to become, while you require early believers, you do require a push from regulation to actually rein in the kind of cash flow that you require to make a significant dent. So I believe that answers your first question.
Yes.
And the second one was?
Second was for more, I mean, technically we answered 1.5 part of it. The larger intent was to understand your thought processes, how it is panning up.
Yeah, so on that aspect, as I was saying, right, so historically what has happened is India has always been a high interest yielding economy. And that's the reason why alternate finance or rather alternate lending products have been quite muted in their acceptance. Now that is changing, right? Again, we saw, like, barring the recent change of interest rates coming up, we were in negative interest rate period for a couple of years now. Very honestly, forward looking with the kind of inflations we expect and anticipate, we would also be in negative in sort of real return for majority part of the next like 2-3 years, one could say easily, right, on and off. So which is what I believe is necessary for people to then start looking for other sources of like, making their capital work for them better. And with that, I believe now there is a significant amount of interest. While that is propping up, there is a lot of willingness. People do see, like I personally see a lot of people sitting on the fence. Like I speak to LPs, I speak to larger funds, also, and a lot of, like, within friends, families, etc. A lot of entrepreneurs themselves also who are wanting to invest money, were actually looking for alternate fixed income products, so to say, where, as you said, right, so time variability is okay. They can absorb one or the other kind of volatility, but then primarily have a more planned sort of capital growth roadmap. So I feel something like that is definitely required, is the need of the hour. Regulations would really help sort of push it through the roof. But until then, I think more education and more awareness is what is needed.
No, absolutely. And that's the reason of all of us trying and educating people.
That's why I heard. Essentially.
So moving to Sandipan, how, I mean, you have worked with Open, you have solved the entire infra space. How do you are looking at the entire market? I'm sure you have evaluated a couple of investing side and alternatives that we were speaking that day. But how do you see as a normal investor plus as a founder on both sides of the story? You have been on both sides of the bucket, having an alternative means of financing, be it any expense for as a founder. Obviously, it saves cost. It gives you more freedom to do and experiment what you're doing. Plus, it leverages on the side of it. So as an early stage founder, how's your take on it of leveraging alternate means of financing, be it legal financing, be it revenue financing? So how do you see this happening, or how do you are seeing second part of the same question? Once you see how it is panning up, you have seen entrepreneurs taking up these different experiments and not just resolving to traditional mechanisms. So your take on both the questions.
So I'll answer the first one. So the first thing is that when it comes to alternate investment, I think definitely every one of you have so far mentioned that regulation will help. Personal take on that is, I think it's waiting for a mutual fund sahiye moment. Okay, that's what will raise the awareness to another level, and I think more investors will start participating. Coming to, like, as a beneficiary of it, I think, as I said initially, right, like just doing things off the books, like which doesn't really, the impact doesn't have like an immediate effect on your books, and able to carry on the business. I think that's the broad, I think, part which we should look at. More than that, I guess other areas, particularly speaking about as a founder, when I look at, say, on my personal capacity, I also invest in different alternate investments and everything that I do. I guess that's where I get to see the other side of things, right? Like where uh, if a company is doing well, can I participate in some way, right? Like where if any operational heavy business, if they are scaling up, like thankfully we are into fintech and we are not an operational heavy business that way.
Absolutely.
But there are a lot of operation heavy business who need to purchase assets, who need to like interim financing if they need to do, or if they need to even finance their any commercial suit that they are financing for. So if they can raise that capital externally, that definitely helps. So yeah.
No, absolutely spot on. Moving to Navruz, I think one of the least discussed and most hyped dispute in the Indian fraternity is the shareholder dispute. I was actually mincing my words very carefully, not to say anything off the track. But as a M&A practitioner, lawyer, looking from the different sides, how do you see this dispute spanning up in Indian context, and where can see founders? Obviously, disputes between founders is one side of it. Dispute between founders and investors again is one side of the story. So how should one avoid such disputes as the first leg? And second, obviously, we have off the record have funded a couple of disputes of such matters. So would love to know your thoughts on both the scenarios.
So the easy answer is scale your business, achieve maximum returns, and the investors go away happy for the founders. But eventually, life is not that simple. I think three ways from a legal perspective that I've seen that founders sort of protect their interests. One is a sort of robust determination mechanism with respect to two main sort of items: a termination related sort of scenario where there's a termination for cause, which would essentially involve an allegation for fraud, gross negligence, willful misconduct, or a material breach of the founders of their obligations. And two, in case of an event of default scenario where the company's performance goes south, or there's been a breach of a transfer restriction, or the company's unable to pay its lenders. And what I sort of essentially mean by a sort of determination mechanism here is that rather than leaving that determination to the board, because when things are going south, there is always sort of mixed interest in the board. What we are seeing founders sort of taking an active role in is introducing these determination mechanisms where there's an independent expert, which could be one of the big four, sort of coming in and sort of determining on basis an independent judgment whether a cause event has been triggered or an EOD has been triggered, and that independent expert's judgment being sort of final and conclusive on the parties. Additionally, similarly, in an EOD scenario on a financial matter, it could be a big four. On a non-financial matter, it could be a Supreme Court judge or an ex-High Court judge sort of determining on that particular issue. So I think a need for a determination mechanisms helps solve the sort of issues that might arise between founders and investors. Number two, I think it's safe to say that a sort of watertight dispute resolution mechanism sort of clause and section is set out in every agreement. And when I refer to a watertight dispute resolution mechanism, I believe that should always take steps. One, in every case, should always sort of be a mediation step before going towards an arbitration or court, and give the parties a chance, whether that be a 15-day period or a 30-day period, to resolve the dispute. In the event the dispute is not being resolved, then to go either the arbitration route or the route of the courts, and have a sort of arbitration either through our Indian Arbitration and Conciliation Act or the Singapore International Arbitration rules, where typically we see three arbitrators, one arbitrator appointed by both parties and a third arbitrator appointed by the two arbitrators appointed. And therefore, having that watertight dispute resolution clause is essential. And number three, I think where in certain cases, sort of relationships between investors and founders are going south in certain cases. There in certain scenarios, investors triggering indemnity sort of obligations on the company and the founders, and sort of this becomes prevalent when sort of, as I mentioned, things are going south. And therefore, when sort of founders are providing their sort of reps and warranties under their share subscription agreements and relevant transaction documents, I think it's very, very critical that though lawyers are being appointed to review the documents, I think it's very, very critical for founders to review every line and every word of the reps and warranties to ensure at a later time that there was no untrue statement or fact that's set out in a previous transaction document, which would sort of come to bite them at a later date. And finally, to disclose sort of matters by way of a disclosure letter, which would form an exception to an indemnity event. And before I stop rambling on, I think the fourth mechanism, which I'm seeing more growth stage companies do, is sort of typically do a vendor due diligence exercise. And essentially, this sort of involves 2-3 months prior to the company going out and sort of raising capital. The companies and the founders are doing a diligence on themselves and sort of ironing out and weeding out all the issues, so that by the time the investors come in, those issues to the best extent possible are rectified. And in the investors diligence process, those issues are sort of weeded out. Otherwise, they're back to sort of valuation discussions and ways to protect themselves against those issues. So a vendor due diligence exercise is a mechanism that I'm seeing several founders across industries and sectors sort of undertaking to sort of assist them in relation to sort of preliminary discussions with their investors.
Absolutely spot on. I think you covered all four of them very nicely. But to add some bit of spice, I want to hear it from Rohit, and definitely after that with Eklavya, because both of you have a similar kind of strategy. I mean, not exactly similar, but yeah, somewhat related, being on the both sides of the table as an investor and then an entrepreneur, and likewise for yourself. So just want to understand the similar discussion that I was having with Navruz. So your take on the similar parameters about the dispute between the founders and how between.
So one very important point which Navruz brought up, but in a very by the by manner, but it becomes very crucial is when things start going south, you suddenly start seeing multiple interests popping up within the board, on the cap table, or in the organization at large, right? And it's not just with the founders and investors, it also goes right down to key employees and other management level team members. I think it's always a very sort of a tough position to be in, but having a partner like, let's say, LegalPay, or having done like precautionary exercise, things like that were suggested, I think those really brings in a lot of peace of mind, because what happens is then there is clarity. So the person who is suffering, then it is just about getting a misunderstanding resolved. Yeah. It's not about contesting on whether there is merit to a claim or not. It is just then about getting it cleared off. So I think that helps a lot. So having one very important thing again is, and I always see this even with early stage transaction, please always hire good lawyers. Please, I'm speaking on his behalf, because as a VC, I have seen companies coming up and at an early stage, as in half of them, they go to lawyers that either lack the experience or professionals who are not actually supposed to be doing that work to begin with, right? And that's to save on legal fee, but things like that come back to bite you big time. Absolutely. So it's exactly like how going back to your analogy of calling it a health insurance, right? Yes, so a legal insurance actually begins with hiring a good lawyer absolutely to draft your document and then moving things forward from there.
No, absolutely, and I think you summarized it pretty well. Eklavya, your views?
Most of it in the same, right? Like I think be very clear and thoughtful about when you enter these upfront, right? Rather than waiting for it, or at least there is clear understanding as much as you can. There'll never be 100%. So I think that
Yeah.
would really save time eventually. And, obviously look for professional advice in these cases, right? Like all the time. Don't be emotional, don't be fool, right? Like you need to deal it objectively in all
No,
cases.
absolutely. See, what and that's I'm saying not as a representative of LegalPay, but in the personal stance also, I think most of the time and energy of a founder goes for raising the baby that they have been building on, and at that point in time, I mean, you don't have that lucrative salary or compensation that you would. So essentially, your wealth is concentrated on one piece. And when such dispute arises, obviously you would need a side of support, not just financially but also emotionally, because you are 24/7 building something that is supposed to be building and your baby. And I think many congratulations on that. Thank you so much, everyone. I think we are just nearing the closure, so would be glad to. Okay, we have 5 minutes, so we can take questions.
Thank you, Kashish. Very interesting discussion. So I had a little different question, and I hope you will accommodate me.
Which one? Which one of us or all of us?
I mean, definitely you and Navruz. Is there an opportunity for? I mean, I'm talking in India, where customer is not the king, and the process is the punishment. And I heard a lot of real estate and AIF being mentioned here. I think you'll find lakhs of consumers who are in the courts. So is there an opportunity for a C2B business where financing for consumer and based on outcome-based legal process? What are your thoughts, and is there a product or is there a service?
Sir, that product is already live, and that's the reason we are having this conversation. So yes, we do C2B businesses. The opposite party we prefer should be businesses. We don't fund criminal disputes or family settlements, but your valuable or tenable claim against businesses, something that we have already funded, and a couple of them are against largest business houses, including the likes of, and they are in the news, likes of Hero MotoCorp, likes of Eros. Now these are the live cases that are within the news corpus that we would have funded. Apart from it, cases against the unicorns also, a couple of them that we have funded. Till the time, and we don't disclose such things unless and until the opposite party go for a disclosure in the court, and that's where it get disclosed in the media. So, but yeah, we definitely do that. And second,
so this is exactly what I was harping on at the start of the discussion. I think LegalPay is pioneering on this front, and I think it's really important that they are, because then it levels the playing field, which it wouldn't have been the case but for this financing. Because financial capabilities play a key role in disputes, unfortunately, in our country, and therefore financing is a key solution to leveling the playing field.
So to cut it short, I mean, you will be able to hire the best possible resources in the country, fighting for your legit claim and giving you realizations.
Thank you.
Any other questions? Were we too crisp or or too vague? As so, thank you so much for everyone taking out time. I think it was a pleasure having Rohit, Eklavya, Navruz, and Sandipan over here. I think it was insightful, at least for me, to hearing their thoughts about the entire entrepreneur investor side of it, and obviously legal and solving the financing side of it. So thank you so much, everyone. It was a lovely afternoon. All of us here, the weather is pretty fine, and I think thank you so much for taking our time and speaking to us.
Thanks.